What up, guys? Randy back again here with Trade of the Week. I presume this is episode 5. I don't really check like how many like what episode it is, but I think it's episode 5. All right, guys, this is going to be a very important episode because I'm actually going to change how you view the market on a weekly basis. Okay, so we are on the chart of gold. Okay, so as you can see, if you go to the daily time frame, you can clearly see that we are in an uptrend, right? We're making high, low, high, low. Okay, but if you go to the weekly, we can actually see that we are currently at a area of U-turn. Okay, but that's not our concern right now. We basically want to look at what happened last week. Okay, so let's go to the H4 time frame. Okay, H4 time frame, sorry, daily time frame. We can clearly see that we were in an uptrend. Okay, and then price went up and went back down to this order block right there. Okay, so if you go to the H4 for more clarity, we can clearly see that. Okay, market went market went up. Okay, in the previous week. Okay, it went up. It broke this structure right here. Okay, so what we were expecting is a mitigation back to probably like these zones here, or even here, or even this fair value gap here. Okay, whichever one gives us a confirmation for entry, would take. Okay, so now boom, the week started here. Okay, this was when the week started. Okay, so let's go to the H1 to see what's going on. Okay, and as you can see here, okay, price actually bounced off of the 200 EMA. Okay, it actually hit the zone. Okay, it hit our zone. Okay, and then it gave us, if you go to the M15, you will see some form of confirmation here. Okay, so the market just wicked in. Okay, and then boom, and then we had that break of structure right there. Okay, if you were scared to enter here, okay, you could have entered at the breaker structure. Okay, if you don't like taking breaker structure because it gives you like a huge risk to reward. Okay, basically what you do is you wait for a mitigation. Okay, you wait for a mitigation back to the zone. Okay, and then boom, this candle here would have been your entry. Okay, so you enter right there. Okay, that's your first trade of the week. Okay, the market goes up again, and they went back down here again. You see here, they were just probably testing this fair value gap. Okay, and then boom, you got another entry again. Market started to move. Okay, so now it's confirmation that okay, now the mitigation of the higher time frame is over. Now we actually starting to see buyers coming in. Okay, so boom, your entry's right there. Okay, remember, like this is an entry on the Monday. Okay, what time was this? This was like it's 9. It's like 7 o'clock. Okay, 7 p.m. Okay, like me, usually I wouldn't take this trade because I don't like overnight trades. Okay, so I'll probably wait for like another entry, during the day or something. Okay, so but nonetheless, if you've entered here, okay, so this is your entry, and obviously your target is always your recent point high. Okay, so this was a target. Okay, that's like a 400 pip move. Okay, so if you just held this trade from here all the way up here to the 100% zone, you would have made 400 and he would have banked 428 pips. Okay. But like during the week as well, like as you can see, like as the market is moving, okay, say you missed the Monday entry, Monday, Tuesday, Wednesday, you can clearly see that we had an opportunity here. But if you go to the H4 time frame, we can see something, we can see it a lot more clearly. Okay. So boom, market is making high, boom, then break a structure right there. Okay. We broke structure right there. And here's our candle responsible for our break. Okay, so impulse mitigation. Okay, let's go to M30 to see what's going on. Okay, or even M15 for like a better entry. Okay, so you can see that. Okay, that's that breaker structure right there. Okay, this is the mitigation. Okay, they actually tapped the zone once. I think this is news. News actually pushed the market up like that, and then after that, they went back down again. Okay, so when they went back down, they touch our zone. Okay, in confluence with the 200 EMA as a dynamic resistance, and you could have probably done something like this. Okay, boom, a break of it is your entry. Okay, so this would have been your entry, but if you don't like this as an entry because this candle is not that impulsive, you just wait for a pullback, a mitigation back to this candle. Okay, boom, and then this candle here would have been confirmation that okay, now we are going, this is our entry. Obviously stop loss below here. Okay, TP is the 100% zone. Okay, so if you entered here, TP would have been this. This is probably like 182 pips. Okay, and look at this. boom, 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 price got hit. Okay, even the 161 got hit as well. So if you'd open 2 trades, one trade target number one, target number two, and you're done for the week. Okay, so this is basically it. Like in 1 week, you just get 2 trades and 2 of them hit profits. Okay, so this was your first trade, and this was your second trade, and you're done for the week. Okay, so now let's have a look at what's actually going to happen. Like what's happening with gold. Like remember, we are at a critical level up here. Okay, but nonetheless, this is still a buyer's market. Why? Because structure is still bullish. Okay, so we have this order block right now. Prices just reacted to this order block, sort of. Okay, not reacted, but it actually closed at this order block. Okay, so beginning of the week, what are we what should we expect to see? Okay, should probably expect to see some form of like, if we see like this is a downtrend, right? So mitigation. Okay, so if we get confirmation to buy, we're gonna buy. Like if we get like breaker structures, okay, if they break this seller cycle, okay, we can buy, set a stop loss here, and then this will be our new target. However, if the market just decides to break down like this, then we'll know that, okay, now sellers are coming into the game. Okay, so that is it for gold USD. Now let's look at GBP JPY. Okay, GBP JPY, it was kind of like a similar situation, but to me here, I'm seeing a seller's market. You see this big order, this big market is actually preparing for a sell-off. Okay, because you see here, this is a reversal pattern. It's a head and shoulder. Okay, so now let's go to D1. Okay, D1, we can clearly see that we are actually at this order block zone here. Okay, this is just for like next week. Okay, but like I'm actually going to focus on like what happened in the previous week. Okay, let's go to H4. H4, we can clearly see that we were in a buyer's market. Okay, market's making high, 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 low, high, 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 low, high, high. Okay, that was the recent order block. Break a structure right there. Okay, boom. Break a structure, candle responsible for the break, mitigation down. Okay, so let me go to M30 to see what's going on. Okay, so boom, that's the break a structure, mitigation. Okay, so let's go to M15 to see something a lot more clearer. Okay, so like this was kind of tricky. Okay, this was just like the bam, bam. Okay, like there was no solid confirmation here. Okay, if you were a risky trader, yeah, you could take something like this, probably like the first green candle. But like, let's see what the M5 has. Okay, so the M5 was a lot more, gave us something, something that we can work with here. Okay, markers making lower, lower, high, lower, low, lower, high. Failed to make a lower low, broke it. See, that's the first sign of buyers. Okay, you could have already bought here. Okay, and it went up, mitigate it back again. Okay, so obviously that gives you like a W pattern. Okay, boom, market went down, and when it went up, closed above. Okay, that's your second entry. Stop loss below here. Obviously target is what? The 100% zone. And boom, see, 100% zone, 81 pip. Okay, 81 pip on one day, and then you're done. Okay, so now see, they came back. I actually took this trade. I took a counter trending trade here. Okay, I took this drop here instead. Took this drop, and I cashed out around this area. Okay, that was a counter trend trade. Okay, but see, that's just the one trade of the week. Okay, if you catch this, you're happy. You're happy. You catch this, you're happy. You're done with this bear. Okay, and then you look at the grand scheme of things. Okay, so now here you can clearly see that we are around this old B right there. Okay, and already in the lower time frame, we see like a head and shoulder forming. Okay, so we should expect a sell-off from this week. Okay, next week probably should expect a sell-off. Okay, so huge sell-off. Okay, because already here you can see that buyers are actually struggling to break this point. Okay, and we've already formed like a reversal pattern. Okay, so next week I'm probably gonna wait for a move down, and then mitigation up, and then boom, I'm gonna sell it. Okay, GBP USD. Okay, so GBP USD pretty much the same thing as gold. Okay, we were in a uptrend. Okay, break a structure, candle responsible for the break. Now I went to the H4. Okay, H4, I actually marked this order block here. I was expecting price to mitigate back to this order block, but then we also had this fair value gap here. Okay, whichever one reacted to, whichever one gave us a confirmation, we buy. Remember? Okay, so in this case, the fair value gap actually gave us an entry. Okay, gave us a confirmation. Okay, we look at H1 to see what's going on. See H1, nothing clear. 30. Well, we can work with this, but like let's just go to M15 for like a better entry. Okay. Okay, so boom. Price hit the fair value gap, struggle, boom, boom, boom. And then boom, this candle that tells us, okay, buyers are now in. Okay, boom, buy there, stop loss below here, target 100% zone. Okay, from here all the way up to there, that was like a 138 pip move. Okay, the trade of the week, one trade per instrument. You see, just that one trade, and we're done for the week. Okay, and then let's go to Euro USD again. We also have something. Okay, we in an uptrend. Okay, uptrend. Okay, and then yeah, so H4. H4, we had a fair value gap and an order block right there, okay? And then price reacted to what? A fair value gap, okay? So let's go to M15 straight. I want to make this video really short, guys, okay? So boom, they hit the fair value gap. You see, maybe lower low, lower high, lower low, lower high, lower low, lower high. You can actually put a line like this, okay? First candle that breaks above this, you start is your entry. And then boom, that candle right there broke above, close above, entry. Stop loss just below here. Okay, how much stop loss is that? It's like a $13, 13 pip stop loss. Okay, targets 100% zone. Okay, boom, from there all the way up here, 123 pips. Done for the week. Okay, guys, you see this. So like you as a trader, you need to focus on like these trades. Okay, you don't have to like as a trader, don't be all day every day on your screen just looking at every tick of the market. No, like just mark your zone. Wait for the market to get to those zones. Get confirmation. You enter. Stop loss. Take profit. You chill. Okay. And look for maximum 2 trades per instrument. Okay, a week. Don't look for like multiple trades, like 1 or 2 trades per instrument. Like as I showed you, like here we only had 2 opportunities in gold. Okay, we had 2 entries in gold. Okay, but the rest was just one. Okay, one here, and then one here, and you're done for the week. Okay, you're done for the week. So this is what you need to focus on, guys. So this is it for this video. Okay, don't forget to like and subscribe, and I'll speak to you next week. Okay, cheers.